stock promotion is so good for short sellers because you can absolutely guarantee that a promoted stock is going to have a lot of selling pressure because you don't pay for promotion unless you're going to be, selling something.
Welcome back. I am lead trainer with StocksToTrade, Tim Bowen, here with a longtime friend and longtime day trader, Michael Goode. I'm going to introduce you to Michael Goode, and then we're going to talk a little bit about strategies as well as something that he does a lot with his trading style is trading the news. And one of the great things about StocksToTrade is we have a real-time news feed. And, something that Michael Goode is, he really looks for these kind of undiscovered news items that could potentially move the stock, or maybe a nugget of information in the SEC filings, which we give you direct access to as well. So welcome, Michael. Welcome back. Nice to see you again.
Good to see you, Tim.
So, you and I go way back, 10 plus years now, I think. Give me a little bit of history. What got you started in trading? What brought you to trading? Actually, let's start there. Kind of, why did you start? You had a professional career before. What kind of brought you to trading?
Well, I didn't really have a professional career before. I was in grad school and
you were aspiring to.
I was aspiring to be a psychologist, a memory researcher, and I realized after 2 years or 1.5 years that I was not obsessed enough to do that.
Okay.
And I liked it. I just did not like it enough to do it 60 hours a week for the next 10 years of my life, and then focusing on little issues because you don't want to take too many risks if you want to get tenure. So I said, okay, I need to do something else. I started looking into finance because I inherited a little bit of money. So I said, okay, let's look at investing in the stock market. And I approached investing and trading as I did anything, which is I studied the hell out of it. And really, I spent probably 30 hours a week.
Now this just kind of set the context for people. We're back 2005, 6?
2004, 2005.
So how, I look, thanks to the Steady Trade podcast, or we're obviously on YouTube right now, there's all this information out there. When you were studying in 2004, 2005, back when there was no indoor plumbing or electricity, what were you studying back then?
Oh, I went to like some classic investing books.
Okay.
Ben Graham and Dodd, then the theory of investing value. Anything that I saw in a popular in the bookstores, I read. Really classic value investing stuff, some momentum and growth investing stuff as well. And then I just started looking for anything. And then one thing I started doing, because I was at a university, Washington University in St. Louis, they had a good business school. I would literally go to the business library and read every single one of the business or investing or accountancy focused magazines or journals once a month. And I started learning stuff from that, like looking at what kinds of factors affect investment returns, looking at types of things you find in accounting statements that really make a big difference in how stocks do. And then I just started looking online too, and I just did a lot of random stuff and got really random results for a while. Tried trading options, I was doing short selling, I was buying stocks. But one of the first stocks I almost invested in is a little company by the name of U.S. Wind Farming. It was a pink sheet traded stock, so OTC, didn't have SEC financials, and I looked at the company. I then Googled the CEO, found out he had spent time in federal prison for stock fraud, and I said, oh my gosh, this is insane. Can I short this stock? And then I couldn't short the stock. But I had at the back of my mind, even back then, at the very beginning, 2004, that it's like, hey, I would like to short this kind of stock.
Now, what this is a question. Like even me, I stumbled across short selling, and that's where I first found profitability. I kind of think I got lucky in finding Tim Sykes and stuff. But back then, So were you reading about short selling in these journals and stuff? Like they actually
I
talked
was,
about that?
yeah,
Okay.
I was
All right,
reading
okay.
about short selling in the journals, and there were a couple books that I think mentioned it.
Okay.
Of course, was Edwin Lefebvre's book
Sure.
on
Madness of Crowds.
no, the book on Jesse Livermore.
Oh, the Liberty, yes.
In which he
Confessions of a... Reminiscences.
Reminiscences of a stock operator.
There we go.
Yeah, and he talks about short selling a lot. And there was another book, I think, the Investment Wizards books mentioned it as well. I want to say William O'Neill's book on CanSlim, he might have mentioned it too. But anyway, from the very beginning of when I started trading stocks, I was doing some short selling, like shorting Apple stock or just random big cap companies. So not penny stocks, but I was familiar with short selling from the very beginning.
Which on a side note, we're going to kind of get into that. Keep in mind, notice Michael said he couldn't short this stock even though he found a perfect short setup. That's one of the things you're going to run into. I mean, it's better these days. Back then, it was even harder. It seems to get easier and easier as the years go by. But you can short pretty much any, now not all, but pretty much any mid-cap, large-cap stocks because there's plenty of shares to borrow, etc. The dilemma, and we'll get back to your story, is a lot of these setups that you look at that are just quote-unquote complete scams or pump and dumps, there's no shares to borrow. So even though you spend all this due diligence and you find this perfect setup, if you can't borrow the shares, you can't short it, and then you watch it crash basically without, which is, I guess, maybe the second part of your story. So
I even emailed that CEO of U.S. Wind Farming and asked him if he was the same guy, because his name was sort of generic. And he was the same guy who went to federal prison, and he told me, hey, I'm not going anywhere. That happened, but that's in the past. And if you don't want to invest, that's fine, but good things are going to be happening. And he was right. Good things did happen. The SEC sued him 5 months later and said that the whole company was essentially a sham. They put out press releases about all these big contracts in this business they had, and they weren't doing any of it. They were just making stuff up and then selling their shares. That was my introduction to pump and dumps, and I followed things. There was a column in Forbes called Informer, which would write about investment scams a lot, and then stock promotions, and I'd follow that. So I'd keep saying to myself, "Hey, I want to be able to short these sort of stocks." And it wasn't until the summer of
what do you think? Kind of is that you think like just because? And again, I was a short seller, primarily 90% short seller for many years. What was that kind of just a contrarian mindset, or do you think you kind of liked being able to, investigate and dig through and find these nuggets, or do you just think you thought, hey, this looks like something that's profitable? So
I think just personality-wise, I'm a cynic. I'm a bit of a misanthrope.
Yep.
I'm
I was
skeptical by nature.
Yeah.
I'm fine with you taking me down that path. I know what I am. I will not deny it. I just had a natural affinity for looking for frauds and scams and really sketchy stuff and betting against companies.
Sure.
So that fast forward maybe a couple years from when I began, and we get into 2007, and around the summer of 2007, I had opened up a brokerage account at Interactive Brokers, and I did that because they had cheap commissions for small trade sizes. Yep. So I could buy 100 shares for $1. And I was doing that. I was doing some algorithmic trading of primarily a lot of small mid-cap stocks. And then
did you use some sort of software?
I was doing sort of like an algorithmic swing trading, based on value and momentum factors. Some stuff I developed using a site called Portfolio 123. I don't even know if it still exists, but that was what I was using at the time, and it brought me to Interactive Brokers. And then one day I looked up this promoted stock that I had read about, probably in Forbes Informer, and I said, hey, this is shortable at Interactive Brokers. I can short this.
Right.
And then I just started looking for primarily promoted stocks, but also just really overvalued, junky OTC stocks and then just sort of shorting and holding on until they dropped.
Now, something, and I get asked this a lot, and I'd like to hear your responses. We talk about promotions and pump and dumps. So, it's kind of a different world these days and this day and age. So, will you explain when you say promoted or when you say a pumped stock, etc., what did that mean 10 years ago and what does it mean today? So,
well, the key thing about a promoted stock, it's all about supply and demand. If you have a stock that nobody knows about, it's a very small company, and they want to get investors, they want people to learn about them. Nobody's buying the stock, nobody cares about the stock. So sometimes you'll have the company itself pay for promotion, or they'll go to investor conferences, and that's, I consider to be at least somewhat legit. It's not something I'm going to be happy
and
about.
Legal.
Yeah,
legal.
It's legal.
Yep. Because that's another thing. People think, people hear pump and dump, and they think, illegal, cocaine, hookers, dead bodies, but there's nothing illegal about a company trying to promote their stock, to a certain extent.
Right,
obviously.
right.
So, yeah.
Promoting a company, whether it's the company itself or an investor, is completely legal. And I would say that some pump and dumps are completely legal too. It all depends on the details. So if a company is saying one thing, or the CEO is saying one thing, and then that's not actually happening. If they're putting out false press releases, then that's fraud. If the CEO is selling shares into the promotion and he's not saying that he's doing that's fraudulent. If a company or an investor in the company puts out a mailer that's saying, "Oh, this is a great company. Look at all these wonderful things they're doing," and there are lies in that mailer,
Right.
in that promotion, then that's fraud. If somebody is promoting a stock and they own shares of the company and are selling into the promotion, that's called scalping, and that's illegal. Now, that's important to differentiate between that scalping, which is a technical legal definition,
Right.
and scalping just meaning like a day trader trading a stock very quickly.
In and out.
Yeah,
bunch of
in and
times
out
a
in
day
a
for
few
cents.
minutes.
Yeah.
But
So that's why I asked that question, because I'll get this from time to time as people they'll get an email, or they'll this dates me, a fax or a hard copy mailer, and they automatically go to, well, this is a pump and dump. Well, again, listen to all the things Michael listed. Listen, these companies, they need money. They might have real products. They may have noble intentions. Just because you get an email or a hard copy mailer does not mean there's something sketchy going on. So, now most of the time, yes, but
Yeah.
doesn't always mean that.
And sometimes these companies are just pure shell companies set up for the sole point of running a pump and dump.
Yes.
Sometimes they're legitimate companies that got reverse merged into a shell, and the people that running the company have no clue what's going on with the shares and the
Right.
promotion. One company I think that was the case with is the Alkaline Water Company.
Okay.
WTER, trades on the NASDAQ now.
Are these the alkaline water people that then have you put a spritz of lemon in it?
I don't know. All I know is that
Just
it's
which-
alkaline water.
You get the joke.
Yeah, sorry.
Come on, isn't your wife a chemist?
Yes, it is.
That was some next level nerd joke right there, man. And it went completely
right over my
yeah,
head.
exactly.
Oh, gosh, I feel bad now. And my dad's a chemist. Too, so I don't think I'll be able to tell anyone about that. But so it's traded on the NASDAQ. Right after it reverse merged into a public company, there was a big stock promotion. And I'm sure I blogged about it on my blog. The stock went from probably 50 cents to a couple dollars a share, and then dropped down beneath 10 cents. And it was a real company with real products at the time, but somebody who owned millions and millions of shares was paying for a promotion, and they were selling into that promotion. Okay. And that is what makes stock promotions so good for short sellers, because you can absolutely guarantee that a promoted stock is going to have a lot of selling pressure.
Right.
Because you don't pay for promotion unless you're going to be, selling something.
Right.
Because
So just kind of a mechanics of, again, this idea, again, back to this person of interest A. If he's got millions of shares and he's pays someone $50,000, $100,000 to pump this stock up, I mean, he's going to dump those shares. He's going to create a massive supply of shares, which basic supply and demand. If nobody's buying because the stock is cratering and there's excess supply, then it's going to drop. And why would person of interest A pay $100,000 to promote this stock unless he's going to sell it? Unless he's just an idiot, basically.
Yeah.
So
If you have a liquid stock that's actually trading real volume, people wants to sell. If somebody wants to sell, they just sell.
If Tim Cook wants to sell 1 million shares of Apple, he can do that easily. Apple trades 20 million shares a day or whatever the number is. He can just sell into the open market. He doesn't need to create fake demand to sell into. So
Exactly. So again, like with the alkaline water company, I think their product is junk. I think alkaline water is junk. But it's a real company with real product, with real business, and it started out being promoted. But the company itself was legit, and now they're traded on the NASDAQ. And that has happened to a couple other big stock promotions. I want to say, which one of the shoe companies was it? Do you remember? I think it was before both our times. Either Jimmy Choo. No, it was Steve Madden.
Yeah,
Steve
which was on Wolf of Wall Street, right?
Yeah.
Or it was based on that.
Yeah. And because the founder actually went to prison for stock fraud because there were misrepresentations about the business. And then, of course, he gets out. The business does really well. So there are real companies, there are fake companies, but anytime the reason why I like and am drawn to the stock promotions is just because you have this really powerful supply and demand aspect, where I know that if I'm short selling, I'm on the same side as the people that are manipulating the stock.
Exactly.
It's like I like to be on the same side as people that are smart, and I like to be trading against people that are dumb. Because when you think about it, who is buying a stock because they get a nice glossy brochure in the mail? They are either an idiot and they believe what's in the mailer, or more likely, they are naive and they think it's a scam, but that they can profit from it, and they buy because of that.
And just again, kind of a little bit of a sidebar. Keep in mind when Michael says he wants to be on the side of the other guys. Remember, when you're short selling, you're selling before you buy. So the idea is you're selling right when that sketchy, person of interest A I keep joking about, you're selling the same time he is, and then you get to then buy those shares back at a lower price, where he's out, he's taken his money and skipped off to the Caymans or whatever. As a short seller, you're selling with him. So you're joining that selling on a fully legal side, and then you're buying those shares back after the stock drops, and then you collect the difference. You're selling before you buy. Same idea. You're buying low and selling high. You're just reversing the time frame is all. So
Exactly.
So let's fast forward to today. Are these still out there? Are these setups out there? How do I find them? Where do I begin? I'm asking for the listener, obviously.
Right.
But
okay, there are still stock promotions out there, and there are still pump and dumps, stock manipulation, and there are fewer of them now than there used to be. I think the SEC and the Department of Justice have done a good job, despite the idiocy of Canadians. The Canadian regulators, for some reason,
specifically Canadian regulators. We love our friends to the north.
For some
nicest
reason,
people around.
They are. Most stock promoters come from Vancouver, British Columbia, or elsewhere in Canada. Why that is, I don't know. But anyway, U.S. regulators have done a pretty good job the last 5 years or so, really clamping down on some of the most egregious stock fraud. And so we talked about getting brochures in the mail. There's a guy who just, I want to say, yeah, he pled guilty by the name, he was known as the mailman. And his companies literally sent out dozens of these mailers promoting stocks every year for years. And again, he's pleaded guilty. He's to criminal charges. He might go to prison for a little while, but he's probably cooperating. And right now, there's a bunch of prosecutions because there's a boiler room operator and a boiler room broker who are both cooperating with the Department of Justice. So you had this back in 2007 to 2012. It really was the Wild West.
Yep.
It seemed like anyone could do anything.
That's back in, you'd get those hard copy mailers and emails all the time. I mean, you talk about, again, if you've watched some of, like, say, Tim Grittani's DVDs or Michael Goode's or Tim Sykes, I mean, they're talking about setting up all these accounts to capture all these emails for the promotion. And, it was the Wild, Wild West back then.
Yeah, and you would look at the most traded stocks on OTC markets every day, and 9 times out of 10, they would be pump and dumps. And you'd have promoted stocks, a $1 stock trading 50 million shares in a day, which is just insane. And you'd have to believe that a lot of that volume is fake volume, which I haven't mentioned yet. So one thing you can do if you're a stock promoter is, send out emails or mailers, or you can do online advertisements and say, hey, this is a great stock, buy it. Another thing you can do is you can just create fake volume, which is definitely illegal. It's manipulative trading. You have account A at broker 1 and you have account B at broker 2. Have a couple different people that appear unrelated and have them trade the same shares back and forth.
Right.
And while they're going back and forth, have them drive the price up a little bit. And then just day traders
if you're talking pennies a share, you might think, well, they're losing money, right? Yeah, they're losing money, but that's not the end game. Isn't to drive it up a couple pennies a share or 10 cents a share. They're trying to drive it up dollars a share or something. And
and also just to get the volume, get people interested in the stock. And day traders find it, they start trading it. And the people that do these stock promotions or pay for the promotions, oftentimes they'd get their shares for 1/100th of a cent per share. So it's not that they need the stock price to go up; they just need buying volume so they can dump their shares. And nowadays, you still have stock promotions. You still have email stock promotions. There's a lot fewer of them nowadays, and they're a lot smaller. And in terms of mailers, and you actually get in the mail, I think there's only been 2 this year.
Right.
There was one I just got I didn't get a few days ago. A friend got a few days ago. I just posted it on Twitter. It was some Canadian gold company.
Okay.
And the company itself paid hundreds of thousands of dollars for this mailer. And so that's a lot less common than it used to be. Email promotion is all the big promoters are gone. Some of them in prison, some of them got fined by the SEC, some of them are on the run from the law. And then you also have online click ads. So if you search for stocks or you search for penny stocks on Google, you'll go look at the ads you see. You'll see some stuff for investing, like brokerages. You'll see stuff for trading chat rooms. You may even see an ad for Tim Sykes or StocksToTrade or something like that. Or you might see an ad for Schwab or E-Trade. And you'll also see this stock is going to go up 100%, or this is our next hot runner. And then you click on that and you're taken to a web page that talks about how awesome this stock is. And then you scroll down to the bottom and look in the fine print and it says, we have been compensated by XLC LLC $40,000 to promote this stock for 1 month. And that's a stock promotion, and that's something that I'd be interested in short selling. There was one stock just a few days ago that had a nice drop. It was being promoted on through click ads. I want to say SMXC. I might be wrong on the ticker. I was not able to get shares to short, which we'll be talking about that very shortly. So I missed out on short selling it, but it had gone up slowly from 70 cents to $1.50, and in one day it dropped from $1.50 to 90 cents. And it's over the next month or two, it's probably going to drop all the way down to 20 cents. So it's really, you don't see the kinds of drops in real stocks that you can see in penny stocks. And
unless there's terrible news, which only happens a few times a year.
And it's not something like you can easily predict.
Exactly.
Or there's a big report out alleging fraud.
Yep.
And if you want to do that, sure, go ahead, but that takes a lot more work to figure out that an apparently real company is a fraud than to figure out that there's stock promotion going on a company that has essentially no assets.
So let's kind of bring this home again. The watcher, the listener, is most likely a new or maybe new to low price stocks. I mean, do you think that this strategy, kind of your original strategy, do you think it's viable today, or is it, or even more so, is it something that a new trader should be pursuing?
I'd say it's viable. You really have to have the right mindset to do it, and there's a lot of reasons it's hard to do.
Right.
So I wouldn't necessarily recommend it, but I still think it's great, and I've made a lot of my money this year from shorting pumps.
Okay.
Even though there weren't a lot of big promotions this year, there were enough that got a decent enough volume that I could take a significant position and then make 50, 60, 70% as the stock drops. And it doesn't take very many stocks like that.
And it's high risk or it's high probability.
Yes.
Too. That's the beauty of it. Yeah.
Now, it's not something you want to do with a tiny account because...
well, let's talk about the hassles. So what are the roadblocks? What are the hassles? What makes it, you say it's hard, what makes it hard?
Well, the main thing that makes it hard is finding shares to short. So if you want to buy a stock, you just buy the stock.
Yep.
It's easy. If
you could buy tomorrow, you could buy a 10,000th of a penny stock and nobody would stop you. Or you could buy a $1,000 stock, nobody would stop you. If you've got a brokerage account and you got money in there, they'll let you buy them.
Right. But if you want to short sell, you can't just short sell any stock. You need to borrow the shares from your broker, because that's what you're doing. You're borrowing the shares from someone who owns the stock and then selling them and then promising to buy them back in the future. So if your broker cannot borrow those shares from someone who owns the stock, then you can't short sell.
Yep.
So it's particularly with penny stocks, with microcap stocks, there are not very many shares out there. Like, let's say somebody's running a big stock promotion, insiders own 80% of the shares, and they're going to dump these shares into the stock promotion. There aren't very many shares out there owned by people in normal brokerage accounts that will let you borrow them.
Right.
So you need to find brokers that are going to give you a chance to borrow shares, and even, I need to back up a step. Brokers that will even let you short low-priced stocks.
That's the other issue. Is you might even, some brokers and many brokers want nothing to do with this. They're like, they don't even try and get you the borrows. So you might be at one of those brokers. So.
Right. So most brokers actually won't let you short sell stocks that trade over the counter or OTC stocks, and most brokers, or a lot of retail brokers, won't let you short sell stocks that are under $1 per share, and that's what most promoted stocks are. They're, under $1 per share or $1 to $2 per share. And again, if you can't short it, then you can't profit from it. And the brokers that will let you borrow and short those shares, again, there's the issue of finding shares to short. So my main broker, if I want to just sort of short and hold a promoted stock, is Interactive Brokers. But I'm competing with probably 100 other people to short the same promoted stocks. So it's really a crapshoot to try is who gets the shares and whether I'll get them in time. And then there are other brokers, but you'll probably pay higher borrow fees. And
other fees. We've seen this in the last few years. And I partly blame our friend Tim Sykes, but a lot of these brokers have recognized this short niche as a profit center, and they've just been raising fees and fees up because they know everybody wants to short these stocks. So now you run into the fact where if you find a broker that has the shares, they know they have a asset, and they really ratchet up the fees on them, which makes it very difficult to profit on them unless you get if you get a 50% drop, you're good, but you need these big drops to cover your fees. So
yeah, there was a stock a lot of us have been trading recently. I always forget the name. Well, maybe it was Discover Gold, but they changed the name. Yeah, DC, a dog, child.
It's one of those weird tickers.
Dog.
I can never type it in right the first time. It's always weird, but anyway.
And so it's interesting. I wouldn't call it a promoted stock. Haven't seen any paid promotion on it. But it's essentially empty shell company. Some dude bought half the company for $200,000. And recently it's had a market cap of over $300 million because it ran from under a cent per share up to $1.80 per share.
Because they had like some CBD product or something, right? Or
yeah,
supposedly.
Well, that's going to come, but that's the guy's private company that hasn't even been merged into the public company yet. So it's the actual public company is still an empty shell, which is just insane to me. But one of the days, I think I paid 3 cents a share to be able to borrow the shares
to get the shares.
For one day. For one day, 3 cents a share on $1.50 stock. So the stock had to drop a few percent just for me to make money.
Yep.
And then, it did have some good drop days, but that's an insane fee to pay. And that means you're starting out significantly in the red,
right,
which is going to mess up your mind and make it more likely that you make a trade just to use those shares rather than being patient and waiting until the time is right. But yeah, there's more and more you'll see stocks like that. And then if I want to hold that short overnight, I'll pay, I think, 4 times that borrow fee at this one broker. And then there's another broker. So my other broker besides Interactive Brokers is Centerpoint Securities. They'll only take you if you have a bigger account. But there's a couple other brokers people use, Trade Zero. They started as an offshore broker. They have a US-based subsidiary now. I've heard some decent things about them. Cobra Trading. They've been around for a long time, well over a decade, but I think they'll charge you 7 times the intraday borrow fee if you hold overnight.
And you might say, well, geez, that's highway robbery, but they know that they're charging those fees. It's basically insurance for them because they know many new traders are attracted to this niche. And remember, this is always the one caveat. I mean, you have, in theory, unlimited potential losses when you're shorting these stocks. And they know people, most of the time, are only holding losers overnight. If you're green on a trade, you're going to cover before the close. So they know if you're holding overnight, you're probably upside down. So the odds of you getting squeezed out are higher. So if I was running these brokerages, I'd probably be charging more than 7x because I know there's a high likelihood it's going to get bad for these people.
Yeah, and that's the thing we always try to mention with short selling is you can lose more than your position. So
I joke when I'll joke on my Twitter account about people being down 300%, and they're like, "Well, you can't be down 300%." Well, you can if you got enough money in your account and you short $100 stock or a $100 position, and you can be down $300 on that thing. As long as you got enough money in your account. So
and actually. One stock I trade about or talk about, CHC Helicopter. At one point I was down 1,000%. The stock went.
That's some good bragging rights right there.
The stock went from 20 cents to $2 in 2 days. And the thing is, this was a real company, not like a promoted stock. But they were in bankruptcy, and the bankruptcy was almost over. So literally, it was a week away from the stock being just deleted, being zero. For whatever reason, the stock has a short squeeze. It was really illiquid. And then all I did is I held the position and prayed that I didn't get forced to cover.
That's the takeaway from it. Don't do that. That's the number one takeaway.
Absolutely.
Don't pray.
And of course, the thing is, it was okay for me. I can take that kind of risk because this was a tiny position.
Right.
It was a $2,000 position. I think. So, but at one point I was down 20,000. Jeez. So don't do that. But this is the kind
that,
of...
my friends, is not, when we talk about risk management, that is not what we're talking about.
Yeah, that is absolutely horrible. And only because I was fundamentally sure of my position and there was a definite catalyst was I willing to hold that. Still, it could have ended very badly for me because another thing I haven't talked about is forced buy-ins.
Sure. Yep.
You borrow the shares to short sell. And what happens, now you don't know this because it all goes on in the broker's computer system, but what if the person you borrow the shares from sells those shares and they go to somebody who bought them in an IRA or a different broker that doesn't lend those shares out? In that case, the broker has to deliver those shares.
Yep.
If they cannot borrow shares from another person, they're going to call you or message you on the platform and say, hey, you've got a forced buy-in. You need to cover this by the end of the day. Or they'll just cover you and say, oh, sorry, you got a forced buy-in.
Yep.
And
They might send an email or they might send it to your platform. Maybe you're on vacation or away or whatever, and you're just out of that position. And you could be down, 2,000%.
Yeah.
And get forced out. Yeah.
So even if you're 100% sure that you're right, you cannot guarantee that you're not going to be forced out of the position.
Yep.
There was a similar position I was in shorting a bankrupt company right before it actually went to zero. This was Peabody Energy, BTUUQ, a few years ago. And it was literally a week before it went to zero. I shorted at $1.50. I think it hit $4 on a short squeeze. And I got some forced buy-ins a couple days later, back at about $2 a share. And then luckily, it was only a small position that got forced buy-ins. I was able to hold most of my short. And then it dropped down to 70 cents, stopped trading, and then deleted. Okay. And I ended up making a nice profit. But if I had gotten a forced buy-in on my entire position at the top, that would have been a 200% loss. Yeah. Even though I was 100% absolutely right.
Right. So let's kind of wrap up here. What is the right, in your opinion, obviously, what is this niche? We've talked about this niche extensively. Who is this for? At what point should you pursue this? Or, obviously it works for you. You mentioned it fits your mindset. You like the investigation side of it and stuff. But I mean, what's your opinion on somebody watching or listening to this? Who should go into this niche, or is it a viable niche, et cetera? So,
well, like I said, it's still viable, but again, there's lots of competition for the shares. It's in some ways it's easy because again, you're trading alongside people that are paying for a promotion, so there's going to be selling pressure. But you need to understand how promotions work. You need to understand how long they typically last, and you need to understand who the promoters are, a little bit about the fundamentals of the company, how many shares they have that they're probably looking to sell, because that determines when you take the position. You don't just short as soon as you see promotion.
Right.
You want to short when the promotion is close to the end, or at least when the stock is close to dropping. And you can't tell that really ahead of time. And sometimes you'll have a big squeeze a day before the stock completely drops and falls apart. And I think there was a couple of stocks like that this year, whereas ended up being down 50%, and then the next day I'm up 50% from my original position. And so it's something you can't do unless you have a decent-sized account. You don't want to do it with a small account, and then you trade it with a bigger account, and you take relatively small positions. So for this year this year really, I've started taking bigger positions again. But prior to this year, most of the time I might take a $10,000 position short a promoted stock, and on average I might make 50% most of the time when it goes well, and sometimes I get a forced buy-in and lose 30%. So there's a lot of volatility in your returns. And it's something where you can't use a tight stop loss.
Right.
Now you can short intraday and wait for a sign of weakness. That is pretty hard. So if you want to do short and just sort of hold, you need to have your position be very small relative to your account size.
So that you can ride out the waves.
Yeah.
So I'm still interested in this niche. Where do I start? How do I begin pursuing this niche?
Follow me on Twitter, Goode Trades, Goode trades, all one word. Go to my blog, goodtrades.com.
Yep, great resource. Yep.
And I have lots of posts about stock promotions and read about them, and because certain kinds of stock promotions are better to short than others. One of my favorite is boiler room promotions that I haven't yet talked about. Like Wolf of Wall Street, it still happens. There will be a bunch of guys, I'm sure they're all guys, sitting in a call center somewhere, and they are calling up random people trying to get them to buy some random stock. And unlike, not a random stock, a stock they're paid to get these people to buy.
Yep.
And they will often get paid a 35% commission. And that means between the owner of the boiler room and the sales guy, they're paid a third of the value that the person is paying to buy the stock. And lots of times now, these aren't brokerages anymore. It's not like you're setting up an account with whatever the brokerage was in Wolf of Wall Street. They're saying, okay, well, here, tell me how much you're buying in your E-Trade account, and then they'll look at the time in sales and say, oh yeah, I see you bought 5,000 shares there, and they're selling those shares right then.
Interesting.
But,
so I did not, to be honest, I did not realize that's how it worked these days.
Yeah, because
okay.
The SEC and FINRA really did a good job smacking down the brokerages that did that.
Okay.
There's still a number of these, and they've continued to work. A good thing for the owners of the boiler rooms, or the people that pay them, is it goes under the radar. So people that follow stock promotions may not even notice anything because the volume's going to be low.
Right.
There's not going to be any wash trading. There's not going to be any obvious promotion out there, and unless we hear about people getting calls, then we don't know what's going on.
Unless you happen to get called, or someone you know, or somebody posts it in a chat room or something. Yeah.
Exactly, but they often end up being the best promotions to short because there is no. They're not traders, they're investors that are buying this. And it also makes them one of the saddest ones because these are oftentimes retirees getting completely fleeced. But when they stop the promotion, they literally pull the plugs on their phones and walk away. And nowadays, of course, they're all done using voice over IP systems with numbers that aren't connected to a physical location. But
just like that guy that keeps calling me to extend my car warranty.
Yes, yeah. Yeah, I get calls like that too. And they just move on to the next stock, and then nobody wants to buy the stock, so you'll see a stock drop from a few dollars a share down to 10 cents a share. I have more than a couple times this year, I think I've made 70, 80, 90% almost. I just short, and then once it falls apart, it does not hardly ever bounces.
So how do you find these though?
They're hard to find. You can scan for stocks that have volume, and then I also do follow people. There's on message boards and Twitter. If I find a stock that has an interesting looking chart that might be indicative of promotion, I'll try searching Twitter, searching message boards to see if there's any evidence that. And usually some people will say something looks like, oh, I got a call from these people.
Okay.
I used to be on one of those lists, but I got tired BSing them. Some traders will literally play along and say, oh yeah, here I buy 5,000 shares, and then they'll turn around and sell those 5,000 shares right back the next minute. And they of course get an advantage from doing that because they know how the boiler room is doing its thing, and they know the minute that the boiler room stops making calls.
Sure.
So that's a nice thing of the stock promotions. Boiler rooms are some of the easiest to short once you find them. They're the hardest to find.
And again, back to trying to just kind of some of the roadblocks of this niche. You mentioned a couple times a year, so how often? I mean, these aren't like just so the viewer of the video knows. I mean, these aren't coming up every day.
No,
these
not
are,
at all. It's a couple times a month.
Yep.
And then so this year I think I might have short sold 6 boiler room
Okay, and
promotions.
we're recording this in almost October.
Right.
So, yeah.
Now, those are the promotions I made the most money on because I was confident and took big positions and then held a long time once they started to fall apart. But yeah, very few opportunities.
Which is great. Again, I mean, if that's your niche and that's all you do, I just kind of wanted to let them know that this isn't, it might sound awesome and be like, whoa, this is great, but you're gonna be waiting a lot for the next one.
Yeah, it's something good to add on to other trading strategies because it doesn't take a lot of time, and it does most of the time you're not in trades, so it doesn't take a whole lot of capital, and you can get some really nice returns. It's not scalable. You can't make hundreds of thousands of dollars or millions of dollars doing this, but one guy who's been in the Tim Alerts chat room moderating that with me for years now, Tim Linto, oddly enough named Tim, just like everybody else who does penny stocks.
Your soon-to-be born son will be named Tim, right?
No.
Okay.
But he's made, I think, 6 figures the last 2 years, and literally all he does is short stock promotions. Okay. And again, when it works well, it works well.
We talk about GTZ or going to zero a lot. So what's like best case scenario when you're short a stock and have you ever taken a stock all the way to zero? So
I hate people that say GTZ, good to zero, because you do not want a stock to go to zero because things get really ugly, and I'll get into that.
Okay.
Actually, my one stock I mentioned earlier, CHC Helicopter, HeliQ, HELIQ is the ticker. I'm still short that.
Okay.
Because
years later,
yep. Because it never got deleted. What happens is, even if the stock gets wiped out in bankruptcy, somebody has to tell. The company has to tell the Depository Trust Clearing Corporation, which is the huge faceless institution which does all the clearing of stocks behind the scenes between all the brokerages. They have to tell DTC, okay, delete this stock.
Right.
If they don't, that stock can sit there, costing you borrow fees and using up your margin indefinitely.
Right.
And that is a horrible, horrible outcome that you want to avoid. There are some ways around it. It gets really technical, but the short answer is you do not want to hold a stock until it gets.
You want it to
after
like
it gets
10,000th of a penny.
Yeah, you want. If you're shorting like a bankrupt company, most of the time it'll be a few cents a share by the time it is about to be deleted, and then you cover because you want to be able to use your money. You're not going to sit around and hope that the stock actually gets quickly deleted. What I have found is that the stocks or the companies that become a public company again after wiping out shareholders, they delete the stock quickly.
Okay.
So Peabody Energy, BTUUQ, that was gone in a week or two. And a number of other stocks were gone relatively quickly. Sometimes it can take a couple months. But yeah, I do not recommend that at all. Because you don't want to end up in a situation where you're holding a stock short and there's no market for it, and you don't know if you're ever going to be able to get out.
Which is the same with halts. Everybody, talks about wanting to short frauds. One of the biggest issues is if you short a real fraud that gets halted in investigating, kind of elaborate on that and the bad parts about that.
So this is a reason.
We're really putting on a great sales pitch on short selling here, aren't we? Everybody wants to just. I can't wait to short my first stock.
Yeah. Well, you're certainly going to be knowledgeable about the downsides and the risks, which you need to be because
that's it. I think that's the biggest thing with newbies is they don't know these things, and that's why so many people run into problems. Yeah. But anyway, explain halts.
Halts are fun. Okay, for OTC stocks, they can be suspended by the SEC. That is always 2 weeks. Then they'll resume trading on the gray market, which means market makers can't trade them for their own account. And you won't see any bids, you won't see any asks. You just have to look at the most recent sales and try to guess a price based on that, which is fine. Usually they drop when they resume trading in 2 weeks. But listed stocks trading on the NASDAQ or the New York Stock Exchange, they can be halted indefinitely, really. And NASDAQ.
We had one there 3-4 years ago. That oddly enough, that Michigan-based shell. What was it?
Oh.
Anyway, that
Yeah.
was halted for like 3 years, wasn't it, or something? I mean, a really long time, whatever it
Yeah.
was. So
But the worst place for halts is Hong Kong.
Okay.
Now, I'm sure most of you are saying, why am I going to trade stocks in Hong Kong? Well, it's a great place to go if you want to short frauds because there's a lot of frauds there. And the problem is the Hong Kong Stock Exchange will literally halt stocks for years and then you can't trade it.
Yep.
So this one company, I shorted it based on a good short report. So some activist short seller put out a nice report saying this is a complete fraud. The stock was halted the next day or 2 days later, and it didn't trade. And the company was legally based in the Cayman Islands, and they started doing a liquidation of the company in the Cayman Islands, and still not trading. And the company was completely dissolved. There was nothing left, legally speaking, of the company, and still it wasn't trading. So there was no way for me to cover my position, and I was paying borrow fees the entire time.
So explain. Okay, so let's lay out a scenario. Say I'm some small trader and I've got a $10,000 account and I'm short $5,000 of this stock. What's that mean to me? That's now halted.
That means you can't use that money, and you're going to be paying borrow fees indefinitely, and that is really bad. Now,
And I can't yell at my broker. I
No.
can't yell at a regulator. I can't call my congressman. I cannot trade that $5,000. And every day, you pay them monthly, but every day there's fees piling up on that as well.
Yes.
So it's like a double whammy. My buying power is gone, and I'm paying fees on top of that as well. So-
Exactly. Now, sometimes you can. There are ways to get around it. It's hard. It depends on the broker. But if you can find somebody who's long the stock, and they want to get out because they want to be able to realize a loss for tax purposes, then you can have them transfer the shares into your account
Interesting,
and
okay.
send them money via PayPal. I have done this. I said, hey, I'm willing to pay 3 cents a share for this worthless stock. Just give me your PayPal information. You give me the shares. I'll send you half the money now, half when we're done. And I was able to get out of a trade that way.
Nice.
And
And he was probably happy too.
yeah, he was happy too because he got money for a worthless stock.
Exactly. Yep.
So, you want to be very careful about that, but that's a reason not to short frauds on the Hong Kong Stock Exchange. It's very rare for a stock in the U.S. to be halted that long.
Right.
But that one, I think I had that position 3 years.
Oh, wow.
It was a $5,000 or so position. I ended up essentially making 100%, except for the $3,500 of borrow fees I had paid, and not being able to use that.
And
money.
not being able to use the buying power. That's
Yeah.
that's one of the biggest things that again, just kind of throwing things out there to be cautious about. You got a small account. If half or 2/3 of your account is stuck in this halt, I mean, you're doing nothing. You don't have any buying power to trade. You're frustrated. You're annoyed, and you're just sitting there waiting, basically hoping. So.
Yeah, there was, and another thing to consider is when you're shorting these stocks, usually they're lower priced stocks, you need to have $2.50 per share in cash to short a stock that's under that price. So let's say I short a stock that's 30 cents or 20 cents. Let's say 20 cents a share. I short $40,000. Wait, hold on. Let me do the math. I short 40,000 shares of a 20-cent stock.
I always go with $1. It's easier to
Yeah,
remember.
it is.
Go ahead.
40,000 shares of a 20-cent stock. So you multiply that 40,000 shares times 250, and that means that I can't do math. That's a $10,000 position for. Oh my gosh, my math is so bad.
That's why you should always go with $1.
Yeah, I really should.
Anyway, the point is,
you're
even
tying up
if you're in
lot
a
of
40-cent stock, you have to have $2.50 worth of buying power that is now locked.
Yeah.
Yeah. So we've spent quite a bit of time.
Short selling can be risky.
Just like getting run over by a car, hit in the head. And I think this is important because so many newer traders, they see the dollar signs, they see the gains, and they don't take into consideration the risks. So I think it's been a great informational video here. But so now that we've given you all the cautions, we've scared you away. Let's kind of wrap it up. Sell me on this. Give me a sales pitch again, just to kind of tie it up. Why you think this is a great strategy and why I should consider doing it. What are the bullet points in summary?
So the benefits of shorting promoted stocks is just that, you can have a win rate of 80, even 90%.
Right.
And
which very few strategies you're going to see that.
Yeah, you never see that.
Yeah.
And you can have profits upwards, if you just short and hold, upwards of 50% per trade. Now, you're going to end up with some very big losses, which means you need to keep your position size small relative to your account. But that kind of risk-return profile is pretty unheard of for trading strategies.
Sure.
And it's relatively easy, and there's not a lot you need to know. You need to understand the promotion game. You need to understand how to borrow shares to short. And but it's not like you need to study for years and years.
Right.
So it's pretty easy. You have a pretty good win rate, pretty high profit margin when you do have successful trades. And that's really all you need. So there's risk, just like there's risk with everything.
Yep.
But as long as you're cognizant of the risks, it's still a good trading strategy. And I've made I've made upwards of $2 million trading stocks over the last decade, but probably, I don't know, about maybe half, certainly upwards of 500,000 from shorting promotions, probably closer to $1 million.
And and what's great about this strategy is, and this is something I talk about a lot, is there is no reason you couldn't do this strategy with a job.
Right.
Yeah, that's the beauty. So when you talk about, I know, again, everybody wants the big numbers, but, if you're making, just as a scenario, 500,000 over a few years, basically part-time, I'm pretty sure pretty much everybody would be happy with that. I mean, you could be doing this from work, especially if you got a professional career. I mean, if you're a lawyer or a doctor or you're self-employed, there's no reason you couldn't be doing the strategy. So
exactly, and I know traders that do it part-time.
Yep.
And even if you do want to trade full-time, you can just add this as an adjunct to another trading strategy.
Yep.
So most of the time, I'm not doing this.
Right.
I'm not spending time. I might spend a couple minutes checking emails every day, and if there's no interesting promoted stocks, then I go on and I do other trades.
Right.
And it's just nice to have another strategy that's completely unrelated to anything out there, and it'll make you money as long as there's pumps out there to short, whether the overall market is good or bad.
Well, again, thank you, Michael Goode. It's Goode Trades on Twitter with an E, Goode Trades. And what is the website?
The website is goodtradesthesame.com.
As well. All right. Well, thanks a lot, Michael, and thank you for watching. Thanks for watching our video. Be sure to comment below with any trading-related question. We love answering your questions. Also, like and share with your friends, and be sure to subscribe to be notified as soon as our next video hits. And if you're looking to expand your trading knowledge, don't forget to check out all of our other videos. And be sure to click the trial below. Check out StocksToTrade. I think it is one of the best, most rapidly advancing softwares out there. Be sure to check out our trial.